Welcome everybody back to the channel. As always, I hope my videos finds you and your family well. In today's video, I'm gonna go over with a few reasons why I choose dividend investing. And for those who have just found my channel through the YouTube algorithm, I started to learn about investing at the age of 44. Just to give you a backstory, at age 43, I didn't know anything about the stock market. I didn't know what a traditional IRA was or a Roth IRA was. I couldn't tell you the difference between a long-term bond, intermediate bond, or a short-term bond. And I didn't even know what a stock was. I didn't know a stock was the actual company that you have to look into to get more information to invest in. But at 44, I started to self-teach myself through investing, through a lot of the YouTube videos, and also a few books that I read. And at age 45, I was comfortable enough to build my wife and my IRA portfolio from the ground up. And as of today, this is our total holding for today. And this is part of the balance from our two previous 401k that we had with our old employer that was sitting in a fund that was charging us close to 2%. With that said, let's get on with today's video and why I chose dividend growth investing. First, disclaimer, I am not a financial advisor. Please consult with a financial advisor professional to find out what type of investing style fits you and your family criteria. And also, this video is not to say that dividend growth investing is better than growth investing nor value investing. This type of investing just fits mine and my wife's criteria for our portfolio. And with that said, let's go over with a few reasons why we like this type of investing style. First, it provides us additional cash flow into our account through dividend payment. And what that does is that it allows us to buy more assets, which is partial shares through a DRIP program. And for those who are not familiar with what DRIP is just a cash dividend that an investor receives from their company that they are investing in, and they reinvest to purchase. They reinvest those dividends to purchase more stock, usually in the form of partial shares. And those partial shares will grow little by little, and through the power of compounding, it adds up to tremendously over the years. So through DRIP, I don't have to add additional fund to my brokerage account, and because our account is under a Roth, the maximum contribution is $6,000, so we're unable to contribute anymore. At the moment, I haven't opened any taxable yet. At the moment, with 3 kids, it's hard to find any additional fund, but hopefully in the future I will. So what I mean by I don't have to add additional money in here, let me just log into one of my brokerage accounts and then share with you what I mean by that. And so what you see here is one of my brokerage account, and the position I'm showing you right now is Apple. And I bought Apple back in November 2018, and I still have 60 shares of the shares I originally bought. And what that 60 share does is every quarter, as you can see here, it started on February 2019. And what Apple did is they pay me a dividend, what you see here in this column, every quarter. So February, May, August. So it looks like every 3 months they pay me a dividend. And as you can see, these dividend kind of increases, and that's what I like to look for in a company, that I want to see these dividend increase without doing anything here. And what these dividend payment does, it allows me to buy partial share at whatever cost Apple was in that particular time. And these shares will add up, and as you can see, I have 60 shares initially. So since the time I held it in November 2008, those quantity has grown to be 61.43315 shares. So technically, these dividend payment has given me an opportunity to earn one more share, 1.4 shares of Apple without putting additional funds in there. So the second reason why I like the dividend growth investing is because I found the company to be easier to evaluate than growth company. I look for a company that pays a consistent dividend payment. I look for a company that has consistently increased their dividend. They have to increase their top and bottom line, which is their revenue and their net margin. And I'm able to see what kind of free cash flow that they have, so they can able to to run their business and also grow their business, at the same time have enough cash flow to pay their shareholder in the form of dividend. And also that free cash flow allows them to handle their debt as well. So the third reason why I like dividend investing is I can fairly estimate how much dividend I will be receiving on an annual basis. This allows me to kind of estimate how much income I would need to pay for my future expenses. And also it allows me to, when I am near retirement or at retirement, to see when I should claim my wife or my Social Security benefit. And let me share with you the site that I use to give you an example of what I mean by that. The site that I'm using is called digrin.com. I am using the free version. There is a pay version where you can go back 10 years. The free version only lets you allow to go back a year, 6 months in the past and 6 months forward. So what you see here is my Roth IRA. On the left column is the holding of my Roth, and all these columns are the months. And if you look down below, these are the payment, the dividend payment that I have received for my holdings in the past 6 months, and also what's coming up for December and also May of 2021. And similar to my Roth, this is my traditional IRA. Same thing. This is the dividend I have received so far, and also the expected dividend in the future. And this is my wife Roth and traditional combined together. As I said, the free version only allows you to have 3 portfolios, so I combine both the Roth and traditional together. And this also gives me an idea of what she will be receiving, what she has received, and what she will be receiving in the future. So there is a tab that you can put all your portfolio together to get an accurate reading of what your yearly estimate is. So by doing this, it allows me to calculate how much dividend I will be receiving for whatever year that I'm looking at. So that allows me to kind of estimate, do I have enough income to pay for my expenses? And lastly, why I like the dividend growth investing is that I don't have to sell my asset, which is the share that I acquired throughout my accumulation phase, to pay for my bills. So my portfolio will remain its company shares of what I have when I retire, and if I don't need to use the dividend, I can use that to do the drip program as I mentioned initially. And let me just share with you a picture that illustrates this much more better. So imagine with me, this tree here is your portfolio, and the branches are actual company that you own. And these companies are paying you dividend, and hopefully at retirement age, these dividends that are paid by these companies will be enough for me to cover my expenses. So typically, most people that invest, they start selling their shares when they are at retire. So just imagine if I were to sell the shares, I no longer have these dividends to help me pay for my bill. And next year, if I need more shares, I have to sell this, and this one won't provide any more dividend for me as well. And just fast forward 3 or 4 years, you start selling more shares, and as you can see, the more shares more company that you sell, the less dividend that you will receive. So that's why I like the dividend investing. Is even if I don't have enough income here, it allows me to see if my Social Security can cover my differences, or if I have any other ways to cut down on expenses. So I hope today's video kind of share with you why I like dividend investing. There are other reasons, but the reason that I share with you today are the one that attracted me the most. And as always, I want to say thank you for watching my video and checking out my channel. So if you haven't subscribed to my channel is called My IRA Portfolio, where I will do weekly updates on how my portfolio that I built from the ground up is doing, from a person that self-taught himself in investing at 44 years and with time and dedication to study about investing, was able to take control of my family IRA portfolio. Leave a comment below to see what type of investor you are, what you like about it, and hopefully this channel will reach those that are on the fence about taking advantage of the stock market. Thanks so much, guys, and have a fantastic day. Bye-bye.